All right, hey everybody, it's DayTraderRockStar here, and I haven't done a very motivational video in a while talking about the markets, but it's time to step back here and take a look at the markets and where we are at, take a little longer term view of it, but also talk about how to be successful in this market. And I stress this every day. You know, there's certain characteristics of being a trader, and I think this whole video is kind of a free-form video because I want to talk about the different characteristics, but to apply those, those attributes to the market, to your trading, to build. Everyone's different. And I was thinking about it just before I started recording. I said, it's so hard to put out a set of rules for traders because we all have different mental states. We all have different situations. We all have different responsibilities. So all of us are different, and that's going to affect our emotions in trading. All right, so we have to become emotionless, and that we have to realize and become very logical. If you see something works and consistently works, then you have to jump on that opportunity because that's your percentages. That's your percentages, and in anything, a game of chance, and I'm not calling this a game. But if for anything like that, you have to have percentages on your side. It helps. That's how you make money. You want to make more than you lose. There's no guarantees in trading. You could have a great stock and the CEO gets caught doing something illegal and the stock gets hit because of it or whatever. So there's always a risk there. But we've identified, and I've taken the lead on teaching divergences because it's such a great setup. And it's so good that I'm so passionate about it. I think it's the only way to really make consistent money. But the trader, each individual trader has a weakness, and that weakness could be anything. Some people can't be patient. Some people are trading beyond their means and expecting too much, so they force themselves to trade. Lots of people who start with an account size that's too small and they're trying to make a living, and they have to go, balls in every single time. And that eventually is going to catch up to you because this is not a 100% guaranteed, win-loss ratio. We're talking high percentages. And you also have the other side of the thing is money management and risk control. So that has to work together. I could show you the entries. I could show you the techniques. I could show you all about how to learn to do this. I've been doing it for over 20 years. But I've been learning this technique probably over the last 10 years because it took me 10 years to get to a point where I realized that markets are so irrational that I have to be logical in my approach. And when the great traders come out saying you have to buy when they're selling and you got to be selling when they're buying, is so true. And mentally and emotionally, we can't really grasp that. When fear comes in, there's no way you really want to put your money out there to get chopped up. But that's what makes a winner, is a step in there. And that's what you want to develop over time. And not I can't develop that sometimes for you unless we talk about it and kind of go over our personal experiences, and maybe you could relate to something that motivates you. Because there is a path here, and it's a great path. So the first thing I always say is, what's the number one thing? If you want to become a trader full time, I guess you want to be a trader full time unless you're doing something you love. And why would you do something else that you love? Trading is something that I'm very passionate about, and I'm sure that people who do it are passionate about it. And you see, there's a path there, but it's a hard path. And the path is always a little smoother for people who have a big bankroll. Money seems to make money, and it doesn't put that pressure on you. So that's one of the important things, is to be able to be funded properly. I would say that's a good characteristic of starting off and being a good trader, is that you have to have the mental. You can't be trading scared. That throws everything out. You can't buy into fear if you're scared. You can't do rational things if you're too emotional in the trade. Now, I just have the S&P up here, and I have a couple, not to make it a boring, I should be doing a slideshow of like inspirational pictures like Pete Rose. No, he was a gambler. Forget about that whole idea. Anyway, I trade divergences. Divergences were formed or developed back in the 1950s, George Lane. And this is not about divergence and teaching you divergence. I have plenty of things out there. Check out the theschoolofstock.com plug. theschoolofstock.com. That's where I teach divergences. Anyway, what we know is when the momentum shifts before the price, that's a divergence. And when we see that, I would say, the highest probabilities, between 75 and 95% of the time, the market makes a directional move in the way of the divergence. It's just so good. It works all the time. And usually when it doesn't work, it's because there's news or you're fighting a very strong trend. And that if there is a strong trend, it's usually because there's an underlying reason for that. So that has to be, developed over time. Your market intelligence, doesn't just come. You can't read a book. You have to really start to see things and feel things and experience things. So, that's the only time I would caution divergences is because of market moving activity. That's pushing things beyond their normal levels. But at a normal level, stochastics are going to be our number one trade. Now, how do you survive if you're looking at a chart and you're saying, well, I love these stochastics. I want to get in April. I want to get in May. I want to get in. But, do you see yourself trading just one time in April and just holding it and trying to time it perfectly with overbought? Yeah. But that's one type of trader. That's if you have a job. Maybe you have a job. Maybe you're investing your money on the side and you love trading. This is what I would concentrate on. I would concentrate on the daily divergences. They're so easy to find. You get them delivered to you, basically, on the HPS watch list. You get daily divergences because we trade. When I take a trade on the watch list, I put out the daily divergence. It's just because we're looking for a trade that gives us a nice move for 5 to 7 days, 3 to 7 days. But we want to have a momentum trade going in our favor and a high probability entry zone there. And that's why we usually get those. Now, you could hold on and do whatever, but I would say that's the long-term trade that we want to take. Whenever we're trying to get into here on April and taking it off here in July and trying to time that goes against everything that for a trader, a more active trader. We want to take advantage of this pop, this pullback, another pop, so we're getting this size and this size, and we add that up, and that's going to way up here compared to just holding it for a smaller gain. So you know where I'm going with that. So, are you that type of trader? Are you considered a swing trader? Maybe a part-time investor? This is perfect. Absolutely perfect. Would stick to that. And the reason I'm mentioning this is because you have to qualify yourself, or put yourself in a category of what type of trader you want to be. What is your what's your schedule look like? Are you working? Do you have kids? Do you have other responsibilities? Are you just in your mom's basement, trading all day? That I can't answer those questions for you. So you have to answer those yourself. If you have that time and you want to be a day trader, then you speed up your time frame. And a day trader meaning trading in and out of the same day, into a position, out of a position, in the same before the market closes. And that's a more active trader. So we talk about swing traders. Now we have day traders. And of course you have to be in front of the computer for that. But you're going to continue to take the same signals. Same signals are there for you. It's just, even today, today was a great example. I'll go back to it. I happened to be, it's a Friday, Paul was covering the markets and stuff, and I was just doing research, and I noticed a divergence setting up early in the morning. So I called in on the show. Actually, we were, I'm always, you'll see a lot of marks on my charts here. These are the charts that I broadcast each day, and so I kind of map them out for you. So if you happen to be interested, every day I'm on the air from market open, 8:30 in the morning, basically 8:30 in the morning till 4 in the afternoon, 4 o'clock every single day. We cover the markets, we trade lives, and I outline all the trading setups for you. So bookmark that, DayTraderRadio.com. Bookmark it now, that way don't forget about it. And check it out when you're home. If you're home all the time, then turn it on because you have someone to trade with. Anyway, we recognized a good divergence here. I think that was Tuesday. And this circles and squares, you might not be familiar with all the lines on the screen. This is, if you're a beginner out there, have no fear. That's what we do here. All right, so here's Friday's trade. And right at this time, about 12:30, we had this nice downward channel. And we had a low. And we had a lower low. So, I'm thinking about this setup, and I'm kind of banging the table on it. I'm like, guys, so I call in. I said, this is a perfect divergence here. Watch for an upside move. And it was also a tradeometer setup, which is it's something totally different. It's a algorithm that points out our buy and sell signals. So we had them both lined up. So at that point, we start to see the thing move. And I kind of go over it in the HPS watch list that I sent out. I wanted to go over this. This is a very good technique, and that's why I want to share it with you tonight. Because I'm not, again, I'll be taking these techniques. I take them all the time. I think it's the best technique out there. This is a little bit different because you're recognizing a 5-minute time frame. This is a 5-minute divergence on a 1-minute time frame. See, each bar represents 1 minute. So how do I know that's a 5-minute? It's not a 1-minute divergence. Here's a low, and here's a lower low, and here's a lower low, and there's no divergence happening there. But because of the distance between that low and this low is about a half an hour, and you do the ratios and stuff, our 5-minute time frame tends to come in that 1 minute, 30-minute, 1 minute time frame if we see this low and a continued low. And I hope I get that across in the way I describe that, because it's just something you have to learn over time. But it's something you see. So this was at that time right here. That was that time frame, 12 o'clock to 12:30, and I referred to it. I said, you see that candlestick down on the 5-minute time frame? That 5-minute candlestick down really represented, these 5 candles, 1, 2, 3, 4. Then the 5 going back up, or 5 the other way. That was the 5 candles, which give you the one big 5-minute bar that dropped to the lows right here. And then because it crossed back up quickly, you saw that divergence, and we had that move back up. Now, for a divergence on a 5-minute time frame, the rule is you place a stop right under the divergence low, a tick under the divergence low, and whatever that is down here. It's a little bit lower than, I think it's there. So this one actually, I don't even know if it came back up, because you're not really going to hold it that long. But the low here was 91.73, and the low here was 92. So it never took out the low, and that's what you really want to have your ultimate stop at. Typically, you'd be out of this trade faster because it's a nice move. It's 92. You got 4 or 5 points on it to 98, 6 points maybe, but definitely 4 or 5. You know it's a 5-minute divergence, so you're going to be able to hold on to it longer. And that's what you're going to, tell me a setup. Here's another divergence back here. You get 2 or 3 points, almost guaranteed a day. Once you start establishing your trading method, I kind of explain how you could set up your business plan. Just look for the video on business plan, your trading plan, business plan. And you have to really decide where you want to take your profits. Everything that you do has to be revolving around preservation of capital and putting yourself in a box where it forces you to take profits and not become a cowboy. Eventually you're going to get shot. And, it's better to be, just the conservative banker who takes in the money, and waits for its time, and those are the ones always live the longest in the westerns, I think, the bankers, right, and the railroad conductors. Anyway, I just totally went on a different tangent, but that's what that's the important part right there. That's the key of making money. Can anybody do it? Anybody could do it if they have to. It's the discipline, it's the patience, it's the money management. There's a few rules that you need to determine what kind of trader you want to be. All right? Swing trader, you have time to invest or you don't have time to invest in the market. Or a day trader. An investor, that goes out even further. You don't even have time. Johnny, get me in a couple stocks for the year. I'll check back at the end of the year. They better be up. That's an investor, So that's a different type of holding and trading, and maybe even considering dividends and reinvestments. But there's all different ways you want to approach. And then we have the scalpers. And I think next week, actually on the show, I'll be doing a lot more scalping because we're going to have a shorter week. We have, it's still going to be kind of slow. It's going to be pretty much an extension into a holiday session. Some people will decide to take the week off because they have a shortened week. And then really, the next week we'll get going on the trades activity again. But like today, there was a great signal there. I think you're going to get great signals going into next week because of the situation. And I think when we see the situation, we just got to step up and we have to take our short-term trades until a better long-term trade shows up. Because right now we have our core positions, and again, going off track. But I want to concentrate more on the divergences next week. So look for that on the show. So that's it. I just want to point out the importance of the divergence, the importance, kind of just talking about, trying to motivate you on getting your business plan, your business quote trading plan, because your business is trading, and you want to treat it like a business. That's the most important thing I could pass on, because that's probably the thing I didn't learn in the beginning. It was kind of a wild west in the beginning, even when it came to reporting stuff and taxes, and I didn't, it took me years to start to really realize that the market's kind of very hard in the way everything is lined up. It's like a casino. The house has a way of on options. There's just, it's not the easiest thing, but there is a way. There's definitely a way, and there's a way to just like there's professional gamblers out there and anything else. There's always a way that's better than any other way. All right, and if it isn't, then it's totally random, and then you wouldn't bother with it anyway. But there's always the best way of doing it. The fastest way between 2 points is a straight line. You can't get better than that. We're taking the straight line to profits. Let me drop the mic on that one.